Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Executive Director of Global Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning, everyone.
Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XBX index is below 30,000 at $29,521. Bitcoin sliding down about 3.2% over the past 24 hours. The CoinDesk Ether price ETX index also below that $2,000 mark now at 1996, trading with losses of about 4.7%. And the DFX CoinDesk DeFi index at 145, also tracking losses about 3.5%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader of crypto news, events, and data. So definitely on the lower bound. Lawrence, what's going on with the
stocks? Yeah, going with stocks. That's just basically it. I mean, it's going with equities. This continues this discussion we've been having for a bit. This idea that Bitcoin is now kind of the proxy for economic outlook, which is a very weird position to be in. But yeah, you saw stocks in the U.S. go down a bit in the pre-market. Primarily, there was an issue with Target having some disappointing earnings. So it's strange to say this, that Bitcoin is now something that mirrors the traditional markets rather than as the rebel. But hey, that's what you all wanted. Mm-hmm. So here we are.
Yep, there's a lot of fear out there, and we also see some of the fallout of that with the Terra Luna community. But they had a huge collapse. UST, their algorithmic stablecoin, depegged from the dollar. Luna, their investment token, the balancer token for UST, is basically trading below pennies. But now they want to fork and create a whole new chain that erases that history. Emily, any initial thoughts?
Well, this is kind of an only in crypto sort of thing where you lose, something like $40 billion in value, and then you're like, let's just try again. So,
what was that? All right.
At the same
that was only
time,
a few days ago. Let's move on.
Let's dive.
Weirdly, I don't want to defend Doe here in any way, shape, or form, but there are a lot of people who had projects in that whole ecosystem that actually may be viable. I don't know why they haven't figured out a way to recode and change things, along the lines for similar platforms. But I think it's sort of like a lot of people are like, hey, I built my entire structure, my entire business idea around your platform. Don't let it die. The technology we still believe in, even if the economics of the stablecoin that you used as part of it is complete garbage.
Right. Well, that's what happens often when you're in a confidence game and you invest so deeply into it. It's hard to leave and accept losses. But in this case, they could possibly just go into a different layer one. Whether or not they do that, They like their community. So, it's their choice. Maybe we'll see what happens if they can trug along. Let's dive further with our markets guest.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
As you can see, there's way too much to talk about today when it comes to the crypto markets. And joining us is Travis Kling. He's founder and chief investment officer at Ikigai Asset Management. Good morning, Travis.
Good morning. Thanks for having me. How are y'all doing?
Pretty, okay.
So good.
Hey.
Yeah.
It's okay. It is okay. This too shall pass. Seriously, this too shall pass.
Try to say that to all the people who threw hey, mom, let me put your life savings into Luna. This thing's going to the moon. Mike Novogratz has a tattoo of it on his arm, for God's sakes. Oh, sorry about your retirement, Mom. But anyway, let's kind of get to it here. We have this, as I was saying in the intro, there's this kind of Bitcoin has become almost a proxy for global market health. And it's a weird position to be in. I'm not saying this has been a long time thing. This has actually just been a few weeks, if not months. But it almost seems as if Bitcoin is now the sort of instead of buying a whole bunch of stocks, global stocks, you just go, I'll buy Bitcoin. I'll get my risk exposure there. What's happening? Why? How is this? Is it because institutions are buying or have been putting Bitcoin on their balance, not just their balance sheets, but in their portfolios? And now it's like everything goes together and the correlations are getting closer to one?
I think there's layers of answers to that question. The two overarching answers are that it's all one trade is like this adage that's been in place for at least the last 2 years. And don't fight the Fed is an adage that's been in place for, I guess, at least 14 years, if not longer. And this don't fight the Fed and it's all one trade that's never been more true than right now. And you can hate that or you can love that, but we're at a point where monetary policy for central banks and the Fed in particular has such an overwhelmingly powerful impact on asset prices that almost everything else is like details in a way. And so, and I think also you just have had so you have that as kind of the overarching framework. And then you have had significant institutionalization in the crypto space, in Bitcoin and in ETH, with that, a lot more of that type of money flowing around. The largest, most successful high frequency trading firms in the world that were trading traditional, they're all now trading crypto as well too. And I think absent a meaningful demand from retail in crypto, which there just isn't right now, it hasn't been for the last few months. I think NFTs are a different conversation, but within kind of liquid crypto assets, then you just end up kind of getting stuck to this correlation. Yeah.
So I do want to. I was going to ask you about some of the stablecoins, but before we get to it, I do want to ask this because as you were talking, let's talk about don't fight the Fed, because I think we have since the start of Bitcoin, since just before then, right? We had the global financial crisis, and the role of the central banks, or the perception of the central banks among market participants, not just the institutions, but I'm also talking about, let's say, the retail investor, people without money, was this view that the Fed had no control anymore, had lost control, that governments were printing trillions of dollars, they were spending all this money, and they were borrowing it, and the Fed was just running the printing presses and running out of green ink. It was doing so much. Now, the view is that for many years, and it's part of what created Bitcoin. Now we have this view, it sounds like, that the Fed is going to get so aggressive, it's not even going to care what happens, that it's going to just mop up all that liquidity that had been in the market sloshing around for a dozen years, and it's going to stop all this, regardless of the damage it causes. Does that change the paradigm of not only how the Fed is viewed, but also the use of cryptocurrencies as an alternative means of exchange and as an alternative currency? Do those paradigms change with this kind of new outlook for the Fed?
Yeah, I've been saying for years that Bitcoin loves QE and detests QT. And for better or for worse, we're on the sort of latter part of that right now. Crypto is a risk asset. Bitcoin is a risk asset. Crypto is a risk asset class. In a lot of ways, it's at the tail end of risk asset, different types of risk assets. Bitcoin is a risk asset that has a specific set of investment characteristics and become increasingly more attractive the more irresponsible monetary and fiscal policy is. So it has that direct relationship with that. And in periods of time where the Fed is, feigning or temporarily tightening monetary policy, has never been and wouldn't be my expectation for Bitcoin or crypto broadly to do anything other than struggled during that period of time. So with that said, I think the next question is, which this is a tough question to answer, and it's not like I have any high degree of certainty, but it's like, okay, well, how much longer is this going to go on with the Fed? How much tightening is actually going to happen? To what degree is Jay Powell jawboning to try and get maximum financial condition tightening with minimal actual tightening? And I think that kind of remains to be seen. If I look at the totality of what the Fed has done, can do, and is incentivized to do, it strikes me that they are most likely to try and maximize jawboning to sort of spook inflation lower over the next number of months without actually getting, say, the 10 rate hikes that are priced into the Fed funds futures rate markets in 2022.
So I want to talk about stablecoins because we can actually use those to see in many ways how the market views liquidity and questions about basically the future of risk assets. This is a chart here, and my eyesight's terrible right now, but it looks to be the market value. It's supposed to be the market value of Tether out in the markets. As you can see, the market cap has dropped about $7.5–8 billion. Simultaneously, we're seeing the likes of USDC, USD coin from Circle, and Binance USD, which is published by Paxos. Those two are going up, not one for one. They're a couple of billion in each or so. So there's still some money just being taken out. So we have this massive amount of redemption. And what's the difference is that Tether has questions and had questions about its asset base, because the question was whether or not those assets were in fact liquid. In an illiquid market, it'd be much different and difficult to redeem those Tether. Is that what we're really seeing here? Is that what we're seeing? A flight to safety, is flight to quality in the stablecoin market, especially in light of the collapse of UST? And if so, what does it tell us about a change in attitude towards how cryptos are traded, how DeFi works, et cetera?
Yeah, so Terra Luna, an algo stablecoin, quite different than Tether, quite different than USDC. I think the collapse of the peg in Terra understandably spooked the entire market. I mean, it caused the largest crash we've had since May of last year, significant volatility in the crypto markets. And understandably, that spooked people, and people wanted to redeem some Tether and some USDC for actual US dollars in a bank account rather than stable coins in a crypto account or in a wallet. And so that happened. Deltec, the bank that banks Tether, processed, I don't know what it was, 7 billion of redemptions over a day or two. Didn't have any issues with that. And the peg on Tether, very briefly spiked down, traded a good amount of volume below 98 cents, and is now back trading up, slightly below par. But it's in total sense there would be this knock-on effect, right? That folks would get nervous looking at Terra and reading that through to other stable coins. I don't think they're directly comparable. Stablecoins were always going to be regulated in the United States before this happened. There's no doubt in my mind about that. Regulators had made that very clear. Whether or not you get accelerated legislation or regulation for stablecoins in light of Terra Luna remains to be seen. Washington seems to have a really hard time getting much of anything done in terms of crypto regulation. And so I wouldn't hold my breath, but
Travis, why do you think there was a flight from Tether and more folks entering USDC rather than vice versa?
So I think USDC has the reputation, rightfully so, for being the absolute safest and the absolute most regulated. Yeah, I think that's the reason why. And you know, Tether has had a lot of you know, there's a lot of shadiness in the history of Tether. There's a lot of uncertainty. There's a lot of Tether bears. There's traditional hedge funds that are buying puts on Tether and paying the premium to put that kind of trade on. I have no doubt that those guys were, you know, sort of chomping at the bit as they saw UST collapsing and thinking that USDT was next. And, you know, never say never. There's risk hiding in every corner of the crypto markets, but it certainly wouldn't be my base case that you would have some kind of collapse of Tether.
Travis, earlier you mentioned Terra Luna, and this morning, Do Kwon, the CEO of Terraform Labs, which created Terra Luna, tweeted out that Terra governance proposal 1623 to rename the existing network Terra Classic, Luna Classic, and rebirth a new Terra blockchain and Luna is now live. And if we look at the proposal page, we already see that about 88% have voted yes to this change. So it looks like it could actually happen. So they're going to do a fork of Terra and Luna before this whole collapse happened. I wonder what your initial thoughts are. Were you ever invested in Terra Luna?
We never had any meaningful exposure to Luna outside of some trading stuff, but more short-term hold, systematic type of exposure.
You didn't get a tattoo?
You know, I am tattoo free. You know, nobody loves a comeback story more than crypto, and the space in general has the memory of a goldfish. And you look at the history of Ethereum and Ethereum Classic and the DAO hack. This is, you know, I would say a significantly more cataclysmic level sort of. It wasn't a hack. It was a stability mechanism flaw that was known but sort of brushed over, or the risk factors were the market acted like the risk factors didn't exist, and then the risk factors did exist all at the same time, and it came crumbling down. That's not the same thing as the DAO hack. The implications are not the same as the Ethereum DAO hack, but like in some ways they are comparable. I don't have any view on Terra Classic or any kind of hard forks or that sort of thing, but it's not terribly surprising that they would try something like that.
Travis, I just want to turn to the altcoin market for a moment. So we've been talking a lot about the correlation between, you know, Bitcoin and equities, but one thing that I find fascinating is just this very, very consistent correlation between Bitcoin and just like every other cryptocurrency, right? I mean, for the most part, it's just been a sea of red or a sea of green. I mean, if you look at our price charts, there's almost no deviation. And just what's that about? I mean, shouldn't there be some standout cases here? Like, why are almost all the altcoins just performing in unison with Bitcoin? I mean, could you just explain what that's about?
I mean, Bitcoin's correlation to the NASDAQ, the way I measure it, which, you know, you can measure correlation a bunch of different ways. The way I measure it, it's 0.91 right now, which is to say statistically like the same freaking thing. And
how many days back?
It's been nearly that high for the last few months. And so when you're in that kind of market, it's just not particularly surprising to me that, you know, altcoins would just basically fall in line with that. But I just remind people that, like, look, I know this is a news show. You guys get on here every day and you got to talk about what the news is. And I understand that this is a dominant market feature right now. Like I said at the very beginning of this too shall pass. This is a temporary market structure. The Fed tightening, that is a temporary event. We just launched, Ikigai just launched a $30 million venture fund yesterday. We've been running the hedge fund now for 3.5 years, and we just launched a $30 million venture fund with, you know, 10-year capital, long locked up capital. And it's a pretty meaningful departure from what we've been doing over the last few years, which is mostly like systematic models-driven exposure to Bitcoin with the purpose of outperforming just holding Bitcoin. And
I was going to ask you about that, Travis. Yeah. So what are you going to be putting that $30 million towards?
Yeah, that's what I was saying. I mean, the reason we decided to do that now was because after years of being in this market and struggling to understand some of the compelling value propositions and value accrual mechanisms for names outside of Bitcoin, last summer when Axie Infinity went on its massive run, that was something that we, were digging deeply into, and play to earn and scholarships and guilds and what was happening with providing living wages for thousands of people in developing nations, and looked at the sort of sustainability or lack thereof of that. And we got compelled enough by like that general investment opportunity that we, wanted to go build and partner with and help invest in the companies that were going to be the most impactful in play to earn, in metaverse, GameFi, gaming, DAOs, some types of NFTs, whatever else comes down the pipe that hasn't been invented yet. And so we're excited about the opportunities in this space broadly outside of just Bitcoin, which is, I was never a Bitcoin maximalist. Like, you will never find me anywhere saying Travis is a Bitcoin maximalist. That's never been our view.
You were always Bitcoin
focused. We've sort of been watching. That's right. Yeah, it has been our focus from an investment perspective. But the entire time we were sort of like watching from the sidelines, sort of like front row seats to the basketball game of all the different types of innovation that was happening for these different types of use cases. And for a while, we were struggling with it. When DeFi Summer happened in 2020, a lot of interesting innovation in the DeFi space. It was unclear to us how value accrual was going to work for those tokens over a medium-term, longer-term basis. So we stayed, I would say, relatively hands-off in DeFi. And it's not to say that Metaverse and Play to Earn don't have value accrual sort of like unsolved issues right now. I think if you look at Axie Infinity as a case study, it definitely does. But it's the top of the first inning. It's something that we have a level of belief in, that we want to be making, multi-year commitments to projects that we think can make the world a better place. Because that's like an important differentiating factor here. Decentralization matters in this sector. In Metaverse, like Facebook changed their name to Meta. Every major technology company and major gaming company is running headfirst at Metaverse. It is very clear to me that this is going to be a tremendously big deal over the coming decades for everybody's life. Like, I'm like highly convicted of that. And you just ask yourself simplistically, do you want Zuckerberg in charge of that? Is that what is best for humanity right now? If you're a little worried about the answer to that, then I think decentralization can play a critical part in this.
Travis, I just want to kind of turn to a much larger question here, which is sort of this like soul searching a little bit that's happening in the cryptocurrency industry. So I get what you're saying in terms of this too shall pass. If you follow market cycles, that seems logical. However, I think some larger questions have been made when so many billions of dollars get wiped out quickly. A lot of people outside of crypto are like, what is the point of all this? Outside of speculation and investment, where are the actual use cases? And the cryptocurrency industry always says, there's, they name some niche use cases. Like even Sam Bankman-Fried has said that Bitcoin as payments isn't really that big a use case. Or they say we're still early, but it's also been like 13 years, right? So I guess what I'm asking is, because it would be helpful for someone like you who can articulate these things well, where is crypto? What are the use cases for crypto outside of speculation and investment? Like, where are we actually seeing this happening? Because I think like when you lose this much wealth this quickly, it's kind of hard to just keep being like, oh, we're still early. Like I think we need a little bit of a better response to that. And what is it?
I will address that. I will try and frame that by telling you to look at tech stocks. Like look at tech stocks, the NASDAQ. You know, what Gary Gensler and Jerome Powell and Janet Yellen and all these jokers tell you is like the safe place to put your money. And look at the price performance of tech stocks. So that's the first way I will frame that. You know, at least Luna had a stability
one
mechanism.
Quick thing on that, Travis, though. The counter argument to that, though, is that tech stocks, I mean, these companies, like even when they're tanking like Netflix has still a very clear use case. Like people know what to use Netflix for. This isn't necessarily my argument, but this is the argument that's out there, right? So people can say, okay, Netflix just lost all this value, but people know why Netflix exists. And the difference with crypto is that when crypto tanks in value, you have all these people on the outside being like, but what do you use it for then if not value? Do you see what I'm saying? So I think that's where the tension is.
I do. And it is a completely valid point. It's a great question. I'm not trying to sidestep it at all. I was just trying to frame that when you're talking about people losing a lot of money. Well, way more people lost a lot more money betting on NASDAQ stocks over the last 6 months than they have betting on crypto. And so I think a couple of things. Bitcoin is sound money. It's a non-sovereign, hard cap supply, global, immutable, decentralized, digital store of value. You can have an argument about whether or not that's important or not. I think that's very important in the context of monetary and fiscal policies from central banks and governments globally. I think it's going to be increasingly more important. I think when you objectively sort of look at the state of centralized fiat currencies and, you know, try and project that out over the next couple decades, I think having a non-sovereign digital store of value is a great use case. I think moving over to layer one smart contract platforms, the broadest way I would characterize this is if I look at big tech broadly and today, and I say, is the state of big tech causing problems in society? Yes or no today? My answer to that question is yes, it's causing problems in society. And then when I project out, you know, is technology going to be more or less intertwined with humanity in the future? More or less. I think the answer is more. Okay, so if technology if big tech companies and centralized technology are causing societal problems today, and humanity is going to become increasingly more intertwined with technology in the future, in the coming decades, then what is the likelihood that the problems that exist today will be exacerbated in the future as humanity becomes more entwined with technology? I think there's a reasonable likelihood that they will become exacerbated. And then I believe that decentralization has the potential to serve as a platform to sort of alleviate the types of societal problems that are they're being caused with big tech right now. So and layer one smart contract platforms provide the sort of decentralized layer of compute and record keeping and the ability to do all kinds of different things with a layer of decentralization, with an ethos of decentralization, and without the sort of context of a publicly traded corporation that has to meet, you know, quarterly earnings. Does that make sense?
Wow, I love it. Yeah. You won me over. Oh, wait, Lawrence, go ahead. You're muted.
Yeah, I think to what Emily is saying, in that, you know, when you think about how old Amazon was when it was Bitcoin years old, right? So if you think about it, it was like 13 years old. It had already proven its use case. This became a company that was destroying retail everywhere. And it became a company that everyone I order on Amazon every day. I'm sure you do. Everyone in America pretty much does. Same thing with Facebook. You know, you talk about Facebook going into the metaverse and the prospects of boomers posting living memes in the metaverse about, you know, complaining about either Joe Biden or Donald Trump is horrifying. But nonetheless, Facebook, when it was Bitcoin years old, became ubiquitous. And Netflix as well, all the FANG stocks, etc. Netflix and Facebook and all those guys proved their point. They did what they were supposed to do. Bitcoin is still kind of in a position where it's like, It's coming any day now. El Salvador just adopted it. It's been 12, 13 years since this thing was launched. And and other than a bunch of guys and hedge funds trading back and forth and doing the likes, it hasn't become the thing that it was supposed to do, and everyone has been promising. And its market cap has shown that it hasn't surpassed all these things for something that's going to take over the monetary system. And I'm wondering, like, at some point, is there some soul searching that needs to happen here? And they say, what is wrong? Like, why isn't this taking off the way big technologies elsewhere, not even great technologies, but other things have taken off? Why has it taken so long for people to adopt and want to use it on a regular basis? Is the market cap and the fact that people are trading on the speculation itself actually hindering that kind of technological growth, because it's fooling it's fooling the developers into thinking that they have everything on track?
So at its peak, Bitcoin's market cap reached like $1.3 trillion. I think was it 1.3? I think it was 1.3, maybe 1.2. Let's call it 1.2 trillion dollars. I don't think there's any way that you can look at something as crazy as Bitcoin, 13 years into its history, especially when the first 8 years of that history, hardly anybody was paying any attention to it. You're talking about like a couple thousand people on planet Earth that cared about this thing. And it really only stepped into some amount of limelight in 2017. $1.2 trillion just doesn't strike me as any kind of this thing isn't getting the adoption that we thought it was going to, or any kind of failure. I mean, it was rivaling like large established crypto. Like fiat currencies, like the Swiss franc. It's like Bitcoin was the size of the Swiss franc.
But Alice isn't buying as much coffee with Bitcoin as we thought she would from Bob.
Yeah.
We're not getting there. And so what's happening? You're talking about the market cap and everyone trading, and we're talking about the dollar volumes, but the actual physical use or like real world use isn't happening the way we were promised.
Okay. So Bitcoin is a medium of exchange. I've been on record for this for years. I've never been particularly compelled by that use case. There is a world where we can use Lightning, Bitcoin layer 2, instantaneous, Stripe type of capabilities where you use the Bitcoin Lightning network for instantaneous payments without having to have price exposure to Bitcoin itself. There's potentially that use case could get traction for the last couple years. So for years, I've been saying Bitcoin's too good at being a store of value to be a good method of exchange. That's still a framework that makes sense to me. The other value proposition framework that I've been using for the last, probably 18 months or so, 2 years maybe, has been Bitcoin as pristine collateral. And that's a term, pristine collateral, that gets thrown around pretty often when describing Bitcoin. The US dollar is the world reserve currency, but US Treasuries is the collateral foundation for the global financial system. And in this, our financial system is debt-based, heavily debt-based. It's based on turns and turns and turns of debt. And in that system, it is the collateral foundation that matters the most. And those are Treasuries. And the interest rate on Treasuries sets the interest rate of every single thing on planet Earth. When I objectively look at the outlook for Treasuries over the course of this decade and the next, it's a challenged outlook. That doesn't mean that I think that the U.S. Treasury or dollar is going to collapse anytime soon. That's not what I'm saying at all. I'm saying that over a multi-decade period of time, and when you're buying 10-year or 30-year Treasuries, that is the world that you're thinking about. That is a challenged financial instrument, objectively. And when you look around the rest of the world and you go, okay, well, if it's not going to be U.S. Treasuries, what else is it going to be? That's a very short list. And I believe that Bitcoin lined up next to U.S. Treasuries within this framework of pristine collateral actually lines up pretty well. Now, that doesn't mean to say that I think by the end of this decade, Bitcoin is going to replace Treasuries as the collateral foundation for the global financial system. Not at all. But I think over the course of 2020s, you can just get infrastructure set up. You can get liquidity set up. You can get all of the borrow lending seamless integration that's got to get ingrained into Wall Street. Get all of that set up and propagated over the course of this decade so that by 2030, if you sort of look at treasuries versus Bitcoin and say, has Bitcoin made some progress as being pristine collateral in the global financial system? I think it will. And I think that by itself is enough for it to be multiple hundreds of thousands of dollars per BTC. Grow to that price over that period of time. And if that ends up, the other thing I remind people about this like whole correlation thing or whatever, that if that's what you think is going to happen, if that's your sort of investment case for Bitcoin, which it is for me, Bitcoin is going to become like the most institutionalized asset on planet Earth. It's going to be institutionalized the way that treasuries are institutionalized because it's going to represent that in the market. And like OG Bitcoiners, whatever, like libertarian, Austrian economics, anarcho, whatever, like they can feel however they want to feel about that. But like, that's the most likely case for sort of like mass adoption. And in my opinion, I think that like, if you read the tea leaves of like who's investing in what and where the regulators are sort of shuffling their feet to, I think it kind of looks like it's moving in that direction over the course of this decade.
Interesting. It kind of goes to your point of decentralization and just having more alternatives and options out there. Travis, thank you so much for this longer conversation on First Mover. Appreciate you coming on. That was Ikigai Asset Management founder and CIO, Travis Kling. Coming up, we'll check in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day. Checking in on Bitcoin, the CoinDesk Bitcoin price XPX index is at $29,521. Bitcoin is down just over 3% over the past 24 hours. The CoinDesk Ether price ETX index is at 1991, also sliding back almost 6% over the past 24 hours. And the DFX, CoinDesk's DeFi index, is at 141, tracking losses of just over 6% for the day.
Joining us now is Global Policy and Regulation Managing Editor Nick Day, who is also the editor of the State of Crypto newsletter. Welcome, Nick.
Good morning.
So, Nick, I hear you have some thoughts on the primary elections. What are they?
Well, not so much thoughts as just kind of looking at the primary elections. Several states held their primaries last night, including North Carolina, Pennsylvania, and Oregon. So we're starting to get a better sense of who's going to be running for a seat in the House and Senate and governor this year. In North Carolina, Representative Ted Budd, who has long been a crypto-friendly congressman, actually won the GOP nomination for the open Senate seat in that state. So the Senate will have at least one more crypto-friendly candidate running for office. In Oregon, things got actually pretty weird. So I don't know how many of you have been following the Oregon 6th. It's a new congressional district in Oregon. There were several candidates running for it, including Matt West, a Yearn DeFi developer, Cody Reynolds, who was a self-funded crypto-friendly candidate, and Carrick Flynn, who was a effective altruist / pandemic research type individual who received over $10 million in backing from Sam Bankman-Fried. None of them won. The primary went to a local state senator, Andrea, I can't pronounce her last name, but a local state senator won. So this was kind of a weird race in that $10 million for a primary seat is a lot of money. It kind of upended, previous expectations of how much money goes into one of these races, and it did not really. It propelled the candidate to second place.
Nick, stepping back a bit, as you said, these crypto focused or crypto friendly candidates came into this, and many people think that having that sort of thing helps them get money from the venture capitalists. But it sounds like at the end of the day, retail politics trumps everything. The local handshaking, was it shaking babies, kissing hands, whatever? I don't remember what it was. But that somehow is going to, that's what really wins elections, and not your take on whether or not there should be regulation of stablecoins. First of all, did this election, was it a net win for the crypto community, or was it a time to reflect that, hey, we probably don't know as much as we think we do, which I'm going to guess is the latter.
Yeah, I mean, it's still, I think, a little bit too early to say, but I think one reasonable conclusion is that crypto doesn't exist in a vacuum. And while it might seem like a single issue voting type, concern for some individuals, it's not for a lot of the US. And if you're running for office and you want to be crypto friendly, that, totally makes sense. But if you're looking at the differences between, for example, Ted Budd's campaign versus some of the other primary candidates, Ted Budd already had name recognition. He's been a representative for his district for years now. So he's been, involved in non-crypto efforts as well. Whereas, in Oregon, this was a primary, this was a new district. There were a lot of kind of, factors to consider. But when you look at who actually won, it was a state senator, someone who's already been, as you said, doing the retail politics for years, who's been involved in representing her district already. So, certainly one of the conclusions is that, crypto's not the only, issue, and people who think it might be are, not going to be prepared for November.
All right, some food for thought. Nick, thanks for joining us. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Let's check in with Crypto Twitter for our tweet of the day. This is from Ethereum co-founder, creator, Vitalik Buterin. He's doing some crypto soul searching. Here's one thought from his thread. Contradiction between my dislike of many modern financial blockchain applications, for example, $3 million monkeys, etc., and my grudging appreciation for the fact that that stuff is a big part of what keeps the crypto economy running and pays for all my favorite cool DAO governance experiments. It goes on, but it's nice to see some humility in crypto, and it's worth a read. Right. That's it for
it's like Meadow Soprano. It's like Meadow Soprano going to law school and then complaining her dad's a mobster, yet she takes his money to go to law school.
There's a lot of contradictions in crypto. Thanks, Lawrence. Thanks, Emily. I'm your host, Christine Lee. Meantime, check out the hash at noon Eastern and all about Bitcoin at 3. You're watching CoinDesk TV. Next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
The Terra community was expecting a vote on Do Kwon's proposal to revive the ecosystem today, but were left with nothing but questions as of Wednesday morning in Asia. Welcome to the Daily Forecast, May 18th, 2022. I'm Megha Chadha of Forecast, covering all things blockchain. Well, the dust still hasn't settled on the Terra saga, and many questions are emerging from the wreckage of lost investments for Terraform Labs co-founder Do Kwon. We'll take a look at that, plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with the surprise re-emergence of China as a major Bitcoin mining hub. A study shows that the country accounted for a fifth of the Bitcoin mining network hash rate in the final quarter of last year, despite a ban. According to data from the Cambridge Center for Alternative Finance, or CCAF, From September to January, China accounted for 21% of the total global Bitcoin mining hash rate. That's quite the turnaround from last July, when data suggested mining activity in the country had fallen to zero following a series of crackdowns beginning May 2021. In a statement, the CCAF said the data strongly suggests that significant underground mining activity is happening in the country. It added that access to off-grid electricity and scattered small-scale operations are among the most common means used by underground miners to circumvent the ban. Chinese authorities have yet to react to that study. Meanwhile, in India, the country's financial watchdog has advised against the endorsement of crypto products by prominent public figures, including celebrities and sportsmen. Based on local reports, the Securities and Exchange Board of India, or SEBI, said that crypto-related advertisements must disclose how crypto dealings could be in violation of local regulations. Trading cryptocurrencies is not illegal in the country, but the activity is not regulated and is categorized as virtual digital assets for tax purposes only. You can find those stories and more at forecast.news. And now on to the ongoing Terra saga. The multi-billion-dollar collapse of Terra's stablecoin UST and its Luna token is still ravaging the crypto industry, with many questions yet to be answered by Terra's founder, Do Kwon. Meanwhile, a vote on the proposed hard fork for the blockchain was expected to go ahead today. Forecast Danny Park takes a look at what we know so far and what might happen next.
Over a matter of days last week, the UST slipped from its US dollar peg before losing its grip entirely. As of Wednesday morning in Asia, it was worth less than 10 cents. Its sister cryptocurrency Luna followed and is now worth just fractions of a cent. According to CoinGecko, the combined collapse evaporated an estimated $45 billion US dollars. Numerous Twitter users have claimed they lost their entire life savings, while moderators of the Terra Luna thread on Reddit have posted numbers for national helplines for anyone feeling overwhelmed by their losses. So what went wrong, and will investors ever see any of their cash again? Many are now digging deep to find the root cause, with South Korean media reports questioning why Terra's offices in Busan and Seoul were closed around 10 days before the depegging happened. Documents available from the Supreme Court of South Korea show that the decision to do that was made at a shareholders meeting on April 30th. Terra has not responded to requests for information as to why, and Do Kwon himself has not picked up calls to his South Korean phone number or answered chat messages. Kwon's whereabouts remain unknown, though one person did try to find him, allegedly banging on the door of Kwon's private residence and demanding to see him before running away. They have since been identified as Kim, an online crypto investment streamer who goes by the screen name Chances. He claims to have lost $2 million US dollars in Luna. Local police have confirmed with Forecast that Kim turned himself in via a phone call. After his police investigation, Kim remarked to local media that Kwon needs to apologize publicly and come up with a plan for recovery. And he's not alone. Over 1,500 people have already joined a South Korean online community aiming to file a class action lawsuit against the two co-founders of Terra Luna. However, Korea's National Office of Investigation said that as of Monday, that no complaint against Kwon had been filed. And while police are closely monitoring the situation, there isn't a plan to start an investigation on Terra yet. One expert told Forecast recovering crypto losses is difficult in the country due to a lack of institutional background.
상품을 판매하는 금융사에 설명하는 약관에 의해서 그 동의된 범위 내에서 구매자는 어떤 피해가 발생했을 때의 보상이나 배상을 받을 수 있습니다. 그러나 현재 그 코인인 경우에는 제도권 내에 없기 때문에 그러한 약관 자체가 존재하지 않습니다.
Kang called for speedier legislation of a comprehensive crypto law in the country that would provide guidelines for investors and businesses to prevent another fiasco like Terra Luna.
가이드라인을 보고 국민들도 내 피 같은 돈을 투자를 할 것인지 말 것인지 의사결정할 수 있는 기준이 된다는 것이고, 또 현재 사업자나 새롭게 진출하려고 하는 사업자들도 그래 이 정도면 우리가 생각하고 있었던, 구상하고 있었던 사업의 가치가 있어, 아니면 없어, 판단을 할 수 있는 기준이 되기 때문에.
In the meantime, though he has not appeared in public, Kwon has surfaced online, proposing his Terra Ecosystem Revival Plan 2 on Tuesday. It suggested a hard fork for the Terra blockchain, creating a new fork called Terra and renaming the original chain Terra Classic. However, the plan was not well received. Over 5,000 members of the Terra community had taken part in a preliminary vote by Wednesday morning in Asia, with 92% of them saying no to the idea. Meanwhile, some were questioning why an official vote on the plan, which was expected to happen during Asia hours today, had not begun by around 9:30 a.m. Hong Kong time. An updated and final version of the plan then appeared late Wednesday afternoon, omitting any specific mention of a fork or of a vote. We'll be keeping watch on what happens next. For Forecast, I'm Danny Park.
Crack in the crypto markets hasn't spared the world of NFTs either. Some of the biggest and most popular NFT collections like the Bored Ape Yacht Club and other deeds have lost between 30 to 60% in the last 7 days. What's led to this decline, and is this a buying opportunity? Let's find out from Crypto Slam's NFT relations strategist Yehuda Pecha on what he's looking at on NFT Insider. Great to see you again, Yehuda.
Good morning, Mega. Great to be here with you again.
We are seeing hefty losses on collections like the Mutant Ape Yacht Club, Other Deeds, which is also from the Bored Ape creator Yuga Labs, which was launched just about 2 weeks ago. That's lost more than half its value. What explains these corrections?
It's kind of the perfect storm for Yuga Labs. First, you have their really poorly executed Other Deeds public sale, and then we entered a pretty significant bear market. And on top of that, Yuga Labs gave each ape and mutant a free plot of land. So people bought those, the apes and the mutants, with a plan to sell them after claiming that land. The rarest lands are worth hundreds of ETH, so for many people it was worth buying the ape or mutant at that high cost, like up to 150 ETH even, just for the chance of scoring one of those land plots. That type of trading action is really common after a project releases new NFTs. So the correction that we're seeing, it's pretty typical. And I think many NFT investors plan for it. I would say nobody in the NFT space is actually concerned about that price. If anything, people are anxious to buy more at this discounted price.
Do you think this recalibration of the markets would shake out the weaker projects? Should one be buying the declines in big NFT names?
It is. Everyone's been preparing for a major shakeout. It's almost become a legendary tale or a prophecy that in the future, 99% of all the current NFT projects, they'll be worthless. They'll be worth zero. And maybe that's now. People should be really cautious because I'm not so sure that the bottom is in. But if you had your eye on some of the bigger name projects like a CyberKong, like a MetaHero, like a Kutars, this is definitely a better time to buy than during the actual bull runs. We at Crypto Slam, we're actually part of the process of discovering how low these prices can get. 2 weeks ago, we launched a new marketplace called Dropping Now, where the price of every listing will keep dropping all the way to zero. So we're seeing prices that are significantly lower than the OpenSea floor. It's really interesting. And the advice I have for people is if you are shopping, just go for the lowest price wherever you can find it.
But not all is lost. Azuki has had some interesting moves after its creator admitted to leaving his older projects in the lurch. The floor price fell to about 10 ETH after that announcement, but it's back to trading about 50% higher from those levels. What do you think?
Yeah, it's typically a death sentence when the trust is broken between the project creators and the investors. That might be the case with Azuki too, but so far they're holding up really decently. I'm just not convinced with all the anonymous sales and purchases that we're seeing that it's not actually the Azuki project team itself propping up the prices. Personally, I'm looking for and I'm rooting for trustworthy teams and builders that have a track record, a great track record. So I wouldn't touch those Azuki NFTs myself. But an interesting point is that the Azuki founders' previous project, the CryptoFunks, they actually showed us that the community can take over a project and they can steer that project and lead it to success. And hopefully that's going to happen with Azuki. Traders, NFT traders in general, they need to demand better projects and they need to demand better project leaders, because as long as people are happy to hand over, these millions of dollars to these anonymous teams that are offering just a picture, we'll see more stories like this, and most of them will end very poorly for investors.
And what about CryptoPunks? They seem to have escaped the carnage that's seen in other prominent collections.
CryptoPunks, they can't be beat. I can't hide it. They're my favorite. Blue chips are considered a store of value, and they're much less impacted by these bear markets. Historic NFTs, even more so. And since, again, we believe that 99% of the projects out there are going to be worth nothing, what's that 1% that's going to survive? It's the CryptoPunks. It's the project that was the inspiration for Bored Apes and the entire profile picture craze that we're seeing. And even they're responsible for the NFT tech right now, specifically the ERC 721 token standard. So CryptoPunks are always going to be the safest buy in NFTs because their value is in their significance, and that can't be changed. This is actually a not widely known piece of info, but the first iteration of CryptoPunks are called V1 CryptoPunks. They probably cost 10 times less than the world famous CryptoPunks that people know of. And really, I think they're more historic than those V2 CryptoPunks because they were actually Larva Labs' first minted NFTs. So especially in a bear market, that's what I'm working towards.
Well, the V1 CryptoPunks found themselves in quite a bit of legal hot water some time ago. So very interesting history there. But like you said, quality is always going to hold out, and it's going to be the barometer for the projects that do well. Thank you so much, Yehuda, for joining in as always.
Thanks again.
And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Forecast Megha Chadha. Until next time.